Alright, should be able to hear me a-okay. So I'm just gonna check my audio from my end. Although it is showing everything is good. Just give me a few seconds. I am going live today just to save myself some time of uploading and whatnot. And yeah. 2 minutes. Hopefully the audio is good. All right, perfect. I am actually going to keep the chat up this time just because I want to see if it works in case I ever plan to do that live. But today we are talking about a trade that I did and I uploaded it on YouTube Shorts. It was on my Discord. It was on Twitter. So hopefully you saw it. Yeah, it was an ends trade, and let's get started. First things first is I want to make sure I don't forget to talk about the balanced price range. To me, it looked like a balanced price range, and it theoretically met all the requirements of a balanced price range. So, anything else? Trade one and done was just a little term that I used while I was creating the title on YouTube. And so I'm giving all my trades names. I think I talked about this like months ago where I want to start naming my trades, giving them stories, and that way it's easier for me to remember. It's more like a story. Right now, if I'm being honest, it's more like a review, but I am going to go from the daily chart, weekly chart to the daily and then sub daily. So let's get started. Not spending too much time. I think this is going to be a quick one. I don't want to sit here for like 40 minutes because I have other things to do. But we have the weekly chart. Whatever levels I gave you when we were down here, we've reached up into those beautifully. So I know I pointed out this new week opening gap. I know I pointed out the previous week high. It was right here, actually. It was on this candle we were forming. I called out this previous week high. And what else was there? I did call out these equal highs, which we have not traded to yet. But I do think that these are still likely to trade to. Not tomorrow. Not next week, but long term, like I would say over the course of from anywhere to 3 to 4 weeks to 6 to 8 weeks. That's just my off the top of the head. That's about how many candles I see it taking to reach up into there, allowing for some pullbacks, retracements, and yeah. We do have FOMC this month, statement, so that does cause a lot of volatility. It could either inject volatility to the for buy side and then pump it up right here, or it could be a pseudo sell-off to go down, accumulate more discount, and then eventually work towards those highs. So that's not something I can speak on right now, but I'm just kind of giving inner dialogue. Updating you on that weekly chart. Here's the daily chart. I posted a YouTube short yesterday. Essentially, the point of the YouTube short was literally just to recap everything I said on that one video, which was, I think, 30-40 minutes long. All the salient points, they were covered in that YouTube short. To me, I was just trying to make it less than 3 minutes so that keeping that in mind. And the daily chart today, so technically, we're on this candle. This is Thursday's candle. This is Wednesday's. We did trade higher. So we did, push up above this high, which tomorrow, and this is, keep in mind, this is at 6:29 p.m. So I'm actually going to give a real, not real time, but a 1 or 2 hour update post 6:29 p.m. because when I was taking these screenshots, I was going to this is before I was going to the gym, and I did have a requirement that needed to be met if I wanted to see this high traded to. Is my mic off? I don't know why my mic feels a little off. Alright. So, initially, the requirement, and this is an old view, so I'm going to update that right here. So we opened on Thursday's candle. We had the new day opening gap lower from this closing price to that opening price about. And then we traded down 1 tick below that new week opening gap high March 2nd, 2025. And we traded 1 tick below it. And then we started trading higher. So originally I was thinking that I wanted to see that low stay intact no matter what. And that way, then I can feel almost certain that this high was going to be attacked. So that would have been a high probability daily setup for me if this candle would have stayed intact, the low of it, and then we started trading higher. And my mic feels really off. This is kind of bothering me. Hello. Okay, it should be decent now. No, it's the same actually. It's just what I can hear input into my headphones. It just feels weird. All right, so yeah, we do have obviously the new week opening gap. That's one price. The close and open were the exact same, so the high and low as marked as one. But the main thing that I am looking at is this candle right here. So this is Friday's trading, and this is Thursday's trading. So Thursday went up, came all the way down, and then Friday's trading overlapped that entire candle. So now this, for the past 2 to 3 days, 1, 2, 3, has been acting as a discount array. So we would classify this as a bullish order block, but it's also the wick, which is acting as, it's more of a precise PD array, is looking at the wick, kind of. That's how I'm thinking about it. I don't know if that makes sense. It is a bullish order block, but I don't know if the bullish order block is the right classification, because this this body is almost the equivalent of the wick, and this, let me try to find right here, this is more of a bullish order block for me. So that's something that I'd have to study and look into the depths of, to see that is this a bullish order block or is it a inversion wick that we would call. But ideally, or right now, what I'm doing is I'm looking at the consequent encroachment of that wick and the high, and so taking that range, measuring that out, and that's a lot of levels if I were to draw it out here, because we have the new week opening gap, but we also have the new week opening gap right there. And the main criteria at this time, what I was looking for is, does this low stay intact throughout Asia's trading, throughout London's trading, throughout the New York Open kill zone, and all the way until the new 9:30 a.m. opening bell. So, when you put it like that, if that low were to stay intact, that's kind of bullish. I think I know why my mic is wrong. Hello. Okay. So that's pretty bullish for this low to stay intact, and for it to give off the signature of going down 1 tick below the new week opening gap. That would have been a very nice setup, and that would have been something that I would have studied. So, all right? So anything higher, like I said, I'm not necessarily bearish long term. I'm 100%. I don't want to say 100%. I am leaning bullish just because we've discovered price lower. Now we're starting to work higher. And these P rays have been expected. That monthly inversion fair value gap that I pointed out in the video previously, where the ones that I made the shorts on, the upper quadrant was respected in the manner that I talked about. And then what else? The inversion gap right here. Look at the bodies right here. So take this low, that high of that fair value gap, extend it. The bodies, respect it very well manner. So trade up from there. And so right now order flow is pretty bullish. We do have this gap right here that has not been traded in over 60 days. So there is a need to sort of reprice to that range. I believe so, but that's too far for me right now. And I think more near term, in the next week or two, I am looking at this volume. I don't know if it's a volume imbalance. Not really. It's technically a new week opening gap, but I'm looking at this. I think I would say a volume overlap, because the bodies are crossing over each other. So that's the first thing that comes to mind. Maybe I've seen it before on some sort of review of ICT, but that looks like a volume overlap to me. That's what I would call it. All right, next chart. This was the swing projections that I used for one of the trades that I took and I posted, and 6027 was the 1.5 or negative 1.5 standard deviation. And then these were just all extras, essentially. And then we did trade up into the negative 4.5 standard deviation. So I wasn't really looking at this, but I just kept it on here just to kind of log it. The 4-hour first presentation fair value gap in the form of a SIBI that was formed at 6 p.m. I did point that out in my Discord, saying that price will be, or the market will be, heavily influenced by that gap. All right, so there's a breaker that I was watching originally, and I did like how we went. Jeez, my mic is bothering me. All right, it should be okay. Okay, so yeah, I was watching that breaker, and I did like how we went down into the low right there, and then we had these new week opening gaps over here, and what else? I'm blanking right now. I don't know. I just completely lost my train of thought. It's because I have this screen up where I'm looking at the viewers and everything. So I'm just gonna close that down. All right. So yeah, I did like how this candle during the PM session. So at the 2 p.m. candle on the 4-hour chart, we went down and we touched the breaker low, and then something I am looking at and noticing is that in all the 4-hour candles that were formed this week, there's really only one candle that forms a gap. So if you look at this, this is Sunday's opening price right here. So that's Sunday's first candle, and that one is the one that created the gap. I talked about using Friday's candle, Sunday's candle, and then Sunday's second candle, and how I felt comfortable using that as a gap. If you look throughout this whole entire run, there is no other gap created inside of here. So pretty interesting to see how throughout the entire week so far, it's only, you know, Wednesday, but there's only one gap that's created. And obviously with the benefit of hindsight, we do have these equal lows over here, which you'll see when I took a screenshot around 8 p.m., 9 p.m. These were ran into. And then we traded to this 4-hour first presentation gap once again. So that was revisited. I did put this here and I kept it here because that was the idea that I wanted to see form out. And it was just, you know, looking at this rejection block. All right, here is a 60-minute chart or a 1-hour chart. The breaker from this candle to that candle. So technically it's only 2 candles. But yeah. There was this 60-minute gap right here, which I wanted to see treated as inversion, but in order to do that, we have to trade above it and then come back down into it, which would also line up with the quadrants on that gap. So I would want to see the upper half respected, and I'm just going to continue ahead because I said I wouldn't spend too much time on this. Here's the 15-minute chart, equal lows here. So now we can see why the market opened at 6 p.m. and then had the need to go lower. So if we went down at 6 p.m., I would ask myself, you know, looking at this on a regular trading hours chart, or people who are trading options, people who are trading stocks, things that people who are operating outside of the or inside of the regular trading hours, it's a nice time to sweep that liquidity. And then in my opinion, I think it would be nice if they drove it up higher. It feels really weird going live. I don't know why. I'm just not present. But anyways, here is a 5-minute chart. So just a naked view. And the first thing that my eyes go to, the first thing that just looking at this chart is, well, obviously right here we have the true day open somewhere over here, so extend that out. And then we have this candle, so that's something to note. That was under some sort of Trump or a US and China agreement, so that was at 8 a.m. right before CPI. Then we had CPI trade all the way up here into this high and even further, creating this gap. So take that, extend that out, acts as a inversion gap. All right, and then we trade into sell side all the way down below here, and that was during the PM session. So here are the annotations. Fast forwarding, we had the new day opening gap retraded to. Here's the 4-hour breaker, high, consequent encroachment, and low. And then, like I said, that true day open extended out in time. So we have premium above and discount below. And this is the 1-minute buy side that I used as a target on my trade, or as a terminus of my trade. I only targeted 5 handles, but that was a idea that I was looking to pan out, which at the time I didn't notice, but it's also anchored to the fair value gap low. So it's a nice confluence of premium array and premium array. All right, that's the Wednesday 30-minute opening range for midnight. So for the true day open from 12 to 12:30, taking the high and the low of that 30-minute segment and extending it out. You can see that there's a great deal of sensitivity to those levels here, here, and then we use that to consolidate. So, all right, just a visual, adding some colors to the sessions. And so I'm going to keep these on for for a few seconds, or like a few moments, for a second. And although this doesn't really depict anything or give you any greater insights, it's just a visual to draw your attention to the PM session right here. So putting all of this behind us, we're not going to talk about any of that, just the PM session and this liquidity over here. So once these lows were cleared and we traded to the new week opening gap, or sorry, new day opening gap low, the end dog, and the breaker low, in here is where I started to switch my bias or look for.
I think she needs to go. She's roaming around. She's not sleeping.
And look for my bias long. So, and then this is the 30-minute opening range at 1:30 to 2 p.m. So here's the 1-minute chart. So just some things that I liked looking at, and so I decided to highlight it on my chart. This gap right here acts as institutional order flow entry drill. This order block right here, sending us lower into the breaker low and the new day opening gap, and on a 1-minute chart, the 1-minute weekly first presentation fair value gap. So right over here, once we trade into the end dog and the first presentation for the weekly, first presentation for the week, so anchored on a 1-minute chart, we have an immediate bounce, right? A large candle to the upside, and this is after we traded to the breaker. And so this, while this candle was forming, I was watching that, and then this candle comes down, but leaves a little gap over here once this candle closes here. And so it was right over here where I took the trade, and I went long, and my main goal was to account for this to act as a breakaway. So I didn't think that this gap was going to be traded to. Also, because at 2:31 is when we created it. So if you go, from 2:30 and look back till 2 p.m. So 2 p.m. right here, we have this high right here, right about 2 p.m. and we have this low here. So that's encapsulating the entire range. And all I was looking for was that high. So low hanging fruit. And I just wanted to see it expand up into there. And so I took a long over here. It went down, took some heat over there. But then as soon as we traded up and closed above it, we had the next candle where I was watching this. And now this is going to start to get into why I say balanced price range, because right over here, I was looking at this wick and this wick, and then now this wick, right? So once we closed above it, I was looking at this wick, and this wick, and that was just like a laser point view for me to sort of treat this as a balanced price range. So that's just kind of what was in my frame. And then I was kind of thinking to myself that, okay, for the trade to pan out, which was at 5 handles, I don't want to see it come back into the 0.5 or the consequent encroachment of this wick before it hits my final, or my take profit. And then in the voiceover, I just basically mentioned that after the take profit was filled, once the take profit was filled, I left the recording going because I wanted to see, was it going to trade to the buy side or the consequent encroachment first of that wick. And it did happen to be consequent encroachment. And then it ran up one more time. you know, pushing up a little higher than this high, but it wasn't worth it for me. And I'm pretty glad with my entry and exit because it was all done within 1, 2, 3, 4, 5 minutes. So less than 5 minutes is basically how long it took to get 5 handles. All right, and that's, you know, clearing out the chart now, getting closer. But I'm just gonna wrap this one up. Here's the entry, here's the stop, here's the take profit, because I'm really completely out of it. So I'm, like I said, I'm not present right now. Here is the what is this? The 15-minute view at 11:55 p.m. So you can see that we did trade lower, which I did not want to see, but that was the idea. If we did keep this low intact right here, you can see what I'm talking about. Trades down one tick lower. Basically, the way I wanted it to act for me to be bullish tomorrow during the New York AM session was keep this low intact and then work inside this breaker and possibly into this premium ray. And so now from here, I would start to measure these equal highs right here as buy side liquidity. And then for more downside, we can possibly go down below this low. But my focus is I'm going to start off the morning looking at these highs first. And I'll sort of have to gauge, you know, whether I need to shift gears or not to target this low. And here's that 4-hour candle. Going back and revisiting the 4-hour first presentation gap. You can see how the bodies are still respecting that. So pretty nice. Anyways, that is going to be it for today. I'm sorry if that fell off to me, but yeah. What else? You know, go ahead and join the Discord. It is in my bio. So I'm trying to get more people in there, trying to start conversations. And I still do upload the live trade recordings whenever I take them. So I'm fully transparent with that. Every trade I take, whether it's win or loss, it's uploaded. And so we did have a losing trade on Monday, but I showed that it was pretty easily recoverable. And you know, now we have Thursday and Friday's trading, and I'm going to see if I find any setups. And I will try my best to call it live in Discord. And I know I've been saying I'm going to go live for a couple weeks now, you know, like during the New York AM session. But you can see that I'm just really not well adjusted. I don't know. I really thought that going live was going to be a little easier. But it's kind of weird looking at it actually is kind of different being live versus doing a recording, just because you feel more comfortable in your knowing that like it's not live. So yeah, I'd have to kind of get back on track with going live and get into a routine. And you know, I might live trade live, but once again, just based off of today and how I can't even record an analysis, you know, how is live trading going to go? It's going to take at least a week or two to warm up to the fact that, you know, I am live, and there's always new fears. I guess new fears is the right word. No, it's not. It's a different environment going live and trading. And yeah, geez, I just feel so out of it right now going live. We do also have this volume imbalance, so that is a great target, but that is actually the new day opening gap. So even though we I'm just gonna go back over here. Right here, from this close to that open, even though we overlapped it and came up and then came down, this is, like I said, this is a 15-minute chart on a higher time frame, which is the 4-hour right here. We still have that volume imbalance, so it could gravitate back up into there, and that could be your premium target. You know, you could go long here and start to focus on this volume imbalance right here. And it's even nicer that we're, still showing respect to that 4-hour first presentation fair value gap that was formed as a civvy. So technically, by theory, it should go up into there and trade lower. But like I said at the beginning of the week, I would expect it to act as an inversion. And it did so here, 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 here. And I believe so it's likely to do so now. So we have this lower quadrant to work inside of before, we reach that volume imbalance right there. And then possibly, I'll talk about this more tomorrow during the AM session. We do have this rejection block right here. So anyways, that's what I'm thinking for Thursday, Friday. We also do have PPI tomorrow, and then I think there's more high impact news on Friday. So let me know what you guys want to see. If you guys do like the trade recordings, or if you guys prefer, the voiceovers or the no audio. If anyone watches the little 3-minute video that I uploaded of the YouTube short of me kind of making an edit of the analysis that I did for the 22nd week of 2025, and the video was titled ES or something, S&P 500 and dollar index review, why I'm bullish on indices. So I put it right on the title that I was bullish. So that video I basically mixed up and edited and cut out all the unnecessary yapping, and then just put all the points that I thought were important, and yeah, made it into a little TikTok edit kind of, and then uploaded it on YouTube. And yeah, that's gonna be it. So